Hi, this is Mohan Kumar from Brandy and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 2nd, 2023 and see what kind of signals the strategy has given us. Great. So you're looking at the two-view chart in the TradingView platform. And on the left is the Nifty Spot chart, and on the right is the Nifty Futures chart. Both these charts are set to a 3-minute time frame. So before we bring the indicators on, right? Let's look at the price action for today. So it was a major gap up, after a long weekend, right? So the market gapped up, and post the gap up, the price swiftly moved higher, right? As you could see, and then market corrected, and then from there on, it was actually range bound throughout the day, right? So now let's bring the indicators on and see what kind of entry and exit signals the strategy has given us. So I have three custom indicators: the locations or the price levels indicator, right? And also there is a swing high from the past, which is marked in blue. That is from February 16th, right, 2023. And the locations indicator is being brought on, and the participation indicator is turned on, and the trend meter indicator is again turned on, right? Now, with the indicators brought on, you could clearly see as to why the price, corrected, and why the price again actually moved higher, right? So let's quickly have a look. Post the gap open, the price break, or there's a breakout of the daily resistance, as you could see on the spot chart, right? And then it actually, retraced back to the moving average, and it just bounced back a little above the day's high, right? And as you can see on the futures chart, there is a daily resistance too, and the prices seems seeing some kind of resistance at this level. But now looking at the moving averages, they are quite strong. It's a gap up, and post the gap up, the price was moving higher. So the probability of the price moving higher is not that great. However, we don't get into a trade at this point. We need to wait for the price to give us some signals that the price is going to go below the moving average, the green moving average, right? So we don't take the trade right here, but we look. It's a good, it's a good setup, right? But still, I'm a conservative trader. I look for better signals, a confirmed signal before I make an entry. So once the price moved back into the moving average, and we could see the price again move back to the same high point. So on the futures chart, it's quite obvious that the price moved back to the day's high, almost to the same level. But on the futures, on the spot chart, you see that the price is way lower from the high. That is one of the reasons why I use the new Nifty futures alongside the Nifty spot, because the option price action, right? The option chart pretty much mimics the price action of the futures chart, right? And from this point, to the blue moving average is what the target is, right? This is the um, you know move that I'm trying to capitalize on. Looking at the spot chart, it's not a big move. As you could see, the risk to reward is not that great, right? If you enter, this is going to be your entry. There's going to be a stop loss. The risk to reward is not even 1:3. But look at the futures chart. You enter, right? This is going to be a stop loss. There's going to be your entry, and the risk to reward is almost 1:3, or a little slightly higher, right? So this exactly is the reason why I use the Nifty futures, because you could clearly see the price moves, and like I said, the options pricing pretty much makes the futures price movements. So this is one of the low probability setups, but again, considering today's gap up open and the price moving higher in favor of the gap up, the probability of the price moving any higher from this point is not that great. And having said that, look at the trend meter. The trend meter actually indicates that the trend is moving lower, right? And on both these charts, it's around the halfway mark, and the price may now move down to the moving average, because you don't see enough participation pushing the prices higher. Hence, looking at the trend, looking at the open analysis, price open analysis, right? This is a low probability setup, and it's a very good trade that you could have taken. right? Now, post this move, let me quickly move the drawings, right? And post this particular move, excuse me, right? You could clearly see now the price swiftly moved down to the blue moving average. There is a beautiful volume candle that now clearly suggests that there is some kind of participation right here, right? Um, and look at the trend. It's almost close to the green zone. The price has made a higher low. It's a great location. So we have seen that in multiple videos. When the price moves above a certain location, in this case the daily resistance, if the price retraces back to the same point, that point is a very good location. And looking at the trend meter, where the trend meter has made a lower low, the price has made a higher low, right? As you can see, the price has made a higher low here, and the trend meter has made a lower low. It's almost close to the green zone, and this is a clear indication that the strength to the downside is not great. However, the strength to the upside, the momentum to the upside is really strong. So this is another good trade. But knowing that this is going to be a strong area of resistance, you would always tend to actually take your profits right here. So this could be the second trade, even though it's not a high probability trade, with a greater reward, but it's a decent reward considering the risk is going to be just one candle. Like in every scenario, it's going to be the the entry is going to be high of this candle and the stop loss is going to be low, and the reward is going to be at least 1:3, right? So this exactly is how you take trades, and you're going to book profits. Look at the trend meter. The trend meter has not gone into the red zone yet. Looking at the trend, that this is a nice place of support, right? And the trend is moving higher, and there could be a follow-up move. So look at this hammer candle right here, the hammer candle right here coming off of this particular resistance, which is a key location considering today's price action. So this could be another follow-up trade, and the price can go back to the day's high, right? So which is this point on this futures chart. Now that's exactly how you actually take profits. You trail your stop losses, or you actually make a re-entry from a better place, right? So this is exactly how you get into another trade. So you could have actually captured this particular move as well. And the price, now look at the trend. It has moved into the red zone. So this exactly is the place where you could have actually taken your profits. The price is back to the day's high, where it saw some huge move from the top, right? And again, on the spot chart is very clear. It is close to the day's high. So, and look at the participation, right? The zone, it's a very clear indication. There's a lot of there could be a lot of reaction at this place, and the price can swiftly move either higher or lower. And looking at the trend, it's into the overbought zone, and the trend on the futures chart is not showing any kind of momentum to the upside. It's actually sliding down. So it's a very good spot for you to take your profits, as the price may not move any further higher. So you actually capitalized on good moves. Let me quickly remove the some of the drawings. As you could see, uh, the trades very clearly. So the first trade being this one, okay, a very good trade considering the risk to reward. And the second trade being this one, okay, considering the risk to reward, and the third one being this one, right? So beautiful trades, one, two, and the third one being this one, right? So three trades you've taken for the day. And there is another beautiful setup. As you could see, the price has moved into the red zone. And on this particular chart, the price is not showing any kind of strength on the upside. As the price moved upside, but the trend meter actually is showing a conflict. So you could take advantage of this situation. But as I said, like the price is well above the moving averages. The moving averages are you need to actually have the price retrace back to the moving averages and show some kind of weakness before you go on the short. So the price swiftly moved back in, and based on my experience, looking at the Nifty charts for years, right? I've seen cases where whenever there is a gap up and the price moves, in favor of the gap up, the price may tend to consolidate between the day's high and the day's low, right? And you could see, as far as the today's price action is concerned, there is a strong support zone right here, okay, and there's a strong resistance zone right here. So when the price moves back up to the same resistance zone, this is where you try to make an entry, and especially when the price retraces back to the moving averages and actually it consolidates right here, as you can see, and then it may tend to move back to the same low point, right? Whichever is a greater support area. So this could have been your fourth trade, considering the price action, considering the trend beta. As you can see, the trend is neatly sliding down, but the price was consolidating for most part, right? The price is almost back to the same high point, but the trend meter is almost below the midway, right? The same is the case on both the charts, where the trend meter in this case is even higher. And looking at the participation, right? And looking at the trend meter, looking at the current day's price action and the gap open analysis, this is a very good spot for you to take a trade. It's a low probability setup again, because your target could be close to this black moving average or your current day's major support area, which is this. So the price exactly came to this level, and you could see a reaction from this point, and the price swiftly moved back. And from that point, the price started to grind slowly towards the downside. So this is a beautiful trade, considering the risk is just going to be one candle, this red candle that you could see right here. This is the risk you're going to take, and this is going to be the reward. So four beautiful trades for the day, and that is exactly how we take trades, based on facts, and we do not anticipate or guess. We always see the exit, or the place where we close out our trades very clearly before we make an entry. And every single trade, we have a strict stop loss, we have a target, we have a follow-up trade, based on the trend. As in this case, you could see that we took the trade, we booked our profits right here, right, this particular trade, and then we took a follow-up trade, considering the price action for the day, right, and how the trend meter behaved, right? And so this is exactly how we take trades. Some days, days like these, where there's a gap up, when the gaps are really large enough, significantly large, the price may tend to consolidate between a shorter range. And today is a very good example, considering the gap being huge on the upside, and the price even making higher highs. This day is going to be a good example of how the price could actually move in a range bound action. And still, we were able to capitalize and take some good trades with a decent risk to reward ratio. So it's it's a beautiful this particular strategy is purely built on technical aspects. As you see, we don't depend on news or fundamentals, but rather we actually trade based on what we see, and we actually have strict stop loss and targets that we actually take trades based upon. So if you like what you're seeing, please do like this video and subscribe to my channel to get timely updates and notifications on every single video that I post. And there is a course which I have formulated. It's called the Triple Threat Intraday Strategy course. It covers a lot many topics about how these indicators are used. These indicators are custom indicators. It is given to you absolutely free with lifetime access, along with this course. And it's an end-to-end course that covers a lot many topics about charting platforms and trading psychology and trade management, risk management, money management. It's kind of an end-to-end course targeting beginners and experienced traders, and it's a one-to-one private session. And the course can be tailored based on your experience and expertise in the stock market. So if you like the way I am actually making up these topics, and discussing on how the price action is building up for the day, you know the course is almost going to be in a very similar fashion, but rather it's going to be more structured, more organized. We're going to go topic wise, and it's going to be very interesting, and it's a beautiful strategy that you can actually capitalize on. So if you're interested, please do not drop a message to my WhatsApp or email ID that's on the display. And until I get back to you with another episode of Nifty Chart Analysis, it's bye from me, and take care of you and your loved ones. Thank you for your time.